I personally think we have the most exciting panel of today. I think embedded finance, bank as a service, it's been an absolutely crazy year for anyone working in this space, for good and for bad. And I'm really excited about what we're going to talk about for the next 35 minutes. We have a lot of different interesting perspectives. So I'm going to jump straight into the first question, and a bit controversial. So, bank as a service is dead. Long live bank as a service. Agree or disagree? And I'm going to start with Claudio.
Well, actually, I believe banking as a service is still king, and in a fintech world where fintech is queen. And I would say just the way how it changed in the last 10 years, and I've been in the industry now for more than 10 years, and I've seen all the waves of fintech, and I always describe this as the 3 waves of fintech. So basically the first wave of fintech was quite kind of, let's say, not collaboration, it was a battle between banks and fintechs as companies, so more or less a startup having an idea, scaling up, trying to get venture capital and then get the traction and to get big, so such as Revolut, N26 and many, many more. And then at some point the second wave of fintech happened, which was more or less, I would say, all about collaboration. And at that time banks, but also fintechs, just recognized that it makes lots of sense to work together. But what's happening now is very interesting, because the third wave of fintech, and that's also where banking as a service is getting into a different context now, is all about embedded finance, where now I would say new players come in, non-financial players, and then they try to take over the customer relationship. And this is not between banks and fintechs at all. And I think it's also very important to define what is a fintech and what is fintech at all. And in my opinion, fintech is a mindset, and banking as a service is something which enables the fintech mindset, but beyond, let's say, the bubble of banks and fintechs as well. So that's what I think. Yeah.
Super. Yeah, I mean, I think, you often hear that with embedded finance, bank as a service, anyone can be a bank. So, is even the concept of fintech, as we know it, going to be made redundant with the wave of bank as a service and embedded finance? Over to you, Alex. Agree or disagree?
No, I think, let me start with a controversial statement. I think banking as a service has to change very radically to survive. So, first of all, I make a big distinction between embedded finance, which is having financial services be somehow integrated into software, whether that's B2B software, B2B SaaS, or consumer software. But the financial services become invisible, become part of the actual business process or consumer experience. That's embedded finance. Banking as a service is just one way to do it. There's, of course, open banking, which is somewhat limited. There's many other technologies that can be used to deliver the seamless experience. Banking as a service, as it stands today, will not survive because regulators, and this is pretty much happening all over the world, certainly in the US most aggressively, where the regulators are asking the banks, who are ultimately underwriting all the activity behind banking as a service, do you actually know what is going on in the programs that you are supporting? And most banks do not. And so the regulator now is very worried and is asking banks to divest themselves of the fintechs or certainly radically change their systems of control and oversight. This is also happening in Europe. And I think there's an additional trend happening in Europe, particularly in the UK. Not only are the regulators looking at banking service players and telling them, we need you to be much more in control, much more able to know what is going on practically in real time on your license. But on top of that, at least one European regulator, the FCA, is, I would say, flirting with outcome-based regulation. Now, outcome-based regulation is really terrible for anyone who wants the world of building financial services to be easy. The idea that, in the past, regulation used to be about tick these boxes and you're good. Then became risk-based regulation, which is you assess the risk, you make sure you manage the risk, and you're good. So as long as you've assessed the risk and you've managed it, bad things happen, you don't go to jail, right? Outcome-based regulation is even tougher. It simply says, I don't care how you do it, but make sure nothing bad happens to your customers. So two examples of this happening in the UK. The first one is Consumer Duty. It's completely upended the financial services industry, having good consumer outcomes, having good customer outcomes for retail customers. And the second one, which is coming out, is authorized push payments fraud compensation. In other words, even if your customers are scammed, despite your best systems of controls, you're going to have to compensate them. Those are two examples of outcome-based regulation. In the context of banking as a service, these are a killer. How does a banking as a service provider actually ensure good customer outcomes when they are not responsible for ultimately delivering the complete service? So these are really challenging times for banking as a service. Of course, the ingenuity of the industry will find ways around them. It creates huge opportunities for people, maybe some of us here in this conference, to come up with fantastic solutions to make the banking as a service model viable in this new wave. As it stands, until the end of 2023, the banking as a service model will not survive without change.
Thank you. Interesting perspective, and I'm glad that we talked about the regulatory aspect, which I feel like, every month we're seeing some sort of slap on the wrist from a regulator around Europe, and definitely something to chat about a bit further. And I think, as a bank as a service provider, embedded finance enabler, you're always wrestling with, compliance, fulfilling, regulatory requirements. And I mean, this is quite natural, right? I mean, incumbent banks have had to deal with this for many, many years. I think the difference is that when you're a BaaS or an embedded finance enabler, you have to also make your partners happy, which are startups that want to, move quickly and break things. So how do you manage that balance between your partners that don't necessarily have to look directly into all of those compliance and regulatory matters? They simply see an API that they can just build a product on super quickly. So it's, I think very tricky to manage that. And Ben, you have a very interesting perspective, working kind of more on the B2B infrastructure side of things with banks, bank service providers, neobanks. Do you agree or disagree?
Yeah, so what I think is that eventually banking as a service will transform, and we'll probably talk a bit later about that, but I think there will be a very explicit differentiation between what's embedded banking versus what's contextual banking and things like that. So that's one aspect. The other aspect is that, as you correctly pointed, these banking as a service providers that emerged recently, they emerged for different reasons. Some of them have very clear why behind, right? So it's clear why they exist. It's clear how they are different. Others are just copy-paste, basically, right? So because everyone is doing that, let me do that as well. And it's easy on paper. You can even get a license and become that sort of BaaS provider. But then the regulator is looking at you the same way they look at incumbent banks. And incumbent banks spend billions and a huge part of their entire revenues on compliance. And none of the BaaS providers, like a modern sort of venture capital backed or startup type of BaaS providers, can afford the same level of compliance, while the regulator is actually looking at you in a more or less same way. They do not have separate regulation for traditional banks versus BaaS providers, right? So as a result, I think consolidation will need to happen. BaaS providers with a clear purpose and clear vision and why behind will remain, but then will probably strengthen even more their purpose, right, and become more focused on what exact problem they're solving. Are they actually embedded banking or some sort of contextual banking or something else? That's one. Second, this whole entire thing with owning the entire journey, I think will change the proposition a lot, right? As Alex mentioned, the fraud is becoming more and more sophisticated. So you can't just rely on controls that you have on your API layer, right? Talking a bit more in the technical terms. You actually have to embed different controls on different layers throughout the entire journey. And when the upper part, when the things that are on the glass are out of your control, you can't be responsible for the entire compliance, right? So again, this will change the proposition itself and will change the way how the engagement between BaaS providers and fintechs that use them will look like. Right? So I think there will be a lot of change, and this is sort of natural. Is it for good or not will depend really on on regulators a lot as well, right? Because at the end of the day, a lot of the agenda are driven by regulators, and as we all know, they are not the most modern folks in the room, right? So sometimes it takes time for them to catch up with what's best, right, and how things could be achieved, not necessarily the most straightforward way. So these are my thoughts.
Okay. I mean, unless you're lucky enough to be based in Singapore, and then you're working with a very, very innovative, forward-looking regulator. So we're all in agreement that there's definitely a shift happening. And Ben, you mentioned contextualized banking a couple times. Will the word embedded finance change to contextualized banking? Is this essentially what embedded finance is?
Yeah, so to me, I think this whole embedded banking and BaaS came slightly after the world started to talk about contextual banking, right? I still recall probably somewhere around 2015 or so, banks like DBS in Singapore started to preach a lot about contextual banking and how banking needs to be invisible. And to me, the fundamental difference is a focus, right? When we talk about contextual banking, it's all about embedding the financial component into some journeys that are not financial in nature, right? So as a user, if I'm trying to buy something at the shop or buy myself a trip somewhere, or do anything else unrelated necessarily with financial service, but as part of that, I want to get a loan, or I want to split my payments, or just pay with my banking account in the most seamless way, right? To me, that's contextual banking. But when I want to build a banking-like experience on top of someone else's license, that's no longer contextual banking to me, right? You can call it embedded banking, you can call it whatever you prefer, but it's just building banking, being a non-bank, essentially breaking up journeys into two parts. The front-end part, what's on the surface, and the back-end part that is controlled by someone else, right? So to me, I think the industry needs to start talking about these two concepts separately because they are fundamentally different.
I would agree with that, actually. I think if I had to perhaps put it slightly differently, when DBS talks about contextual banking, they're thinking about the bank being in the driving seat. They're thinking, when do I find signals that I know that I can start to offer a loan? So the bank is there looking to use these signals, whether that's coming from an ERP system or whether that's coming from a shopping cart, to actually go and sell some banking services. With embedded finance, I think the thinking is actually on the flip side. It's very much around all the software businesses that have been focusing on specific jobs to be done. So if you think about an HR management platform, the job to be done is to onboard employees, to train them, to keep them happy, to keep them engaged with the business, to make them productive. And if you start with that mindset and think, where can financial services help me in doing this? And that might mean, what if I give employees budgets so they can decide on where to spend the budgets on their training? I can give employees rewards at the right moment. So in a way, it's flipping the other way. It's starting with the job to be done and having a software business catering to that job to be done and gathering the data for that job to be done. And then seeing financial services as just one factor, like data, like automation. Financial services is obviously a very, very powerful ingredient, but it's just one ingredient for getting the whole job done. Starting from contextual banking, I think it's slightly different, where the bank is trying to find space in which to inject banking. So you might end up with the same result in some of these partnerships, but I think the design thinking that goes into delivering embedded finance is actually quite fundamentally different from the thinking around conceptual banking back maybe almost now a decade ago.
Maybe let me add one thought. So think about the word fintech. So what is fintech? So what you need is, you need the fin and the tech. And if you look at banking as a service is more or less just the enabler for fintech business models. So in the past, what we've seen is more or less that the license and also the tech comes from one single source, from the banking as a service provider. But this is changing already. And if you think about embedded finance, then this is just kind of, let's say, a movement beyond the industry, where companies now start to offer financial services. And think about a retailer. 10 years ago, they wouldn't have never been able to offer a bank account, a card, whatsoever. So this is now possible because of fintech, because of banking as a service, and because of embedded finance. And the change, it's a big change what we see, because I would say fintech is grown up now. Of course, the market right now, when it comes to venture capital, is also changing a lot. But the players which are now entering the market, they are different ones, because they have established business models, they have ecosystems and lots of customers already. And now they want to tap into that business where they just want to get part of the market share. And if you look at embedded finance at all, or contextualized banking, I would say embedded finance is kind of, let's say, the trend, but the contextual thing is how you actually realize the user experience, how you bring it into context in an ecosystem. And that's what many companies are trying to do right now, and a couple of them are already live. And I could give lots and tons of examples. And I think then you really see what makes sense, because the future of finance is embedded for sure. And I truly believe that every major platform with customers already on their own ecosystem can become a bank without being a bank. So we are not talking about a regulated word of a bank. It's more like how a consumer is feeling. And now a very important thing is it's an opportunity or a threat for a traditional bank as well. Because you can either be part of that growing market, or you just want to be isolated in what you offer right now, bank account, card, whatsoever, lending, borrow, invest, whatever you know. And I think that's the very important thing, what we all need to understand, that the banking as a service world is changing, new participants are coming in, and banks can be part of it or even not. And that's what we see in the future.
Yep. And I mean, it's a shame that Tanner wasn't able to make the panel. We would have gotten the incumbent bank perspective, but I agree. I mean, we are seeing NatWest, SEB, like quite a few of the incumbent banks looking to, launch, an embedded business model. I have a question. It's a bit of a wild card, but your response has got me thinking. Do we think embedded finance, like when we're embedded finance or a bank as a service provider, in a couple years from now, will we be serving fintechs to make a neobank play, or are we fully shifting towards brands almost disrupting and taking over what we see from, the traditional neobank challenger banks?
I think embedded finance is a really genuine disruptive force. Let me make a couple of predictions. First of all, banks, when they're talking about embedded finance today, they have not crossed a really important barrier. Most banks see embedded finance as a servicing channel, a way of serving their existing customers. Moving beyond that to having embedded finance be a channel for acquiring new customers is too big a challenge for most banks, because of course you have to do the onboarding. How do you do onboarding in an embedded context? That is a problem that most banks have not got their head around. So that is one thing that I think in the next couple of years, some banks will do it. I think very few will. Most banks will not do it. So that's, I think, one thing that will play out in the next couple of years. The other one perhaps is more controversial, which is, in a way, embedded finance squeezes the fintech sector. Because if you've got basically an ERP system doing your accounts payable and making payments to your suppliers directly from your bank, all in an embedded way, why would you create an accounts payable fintech? And you can say the same thing for almost any use case here. Any fintech that has found a specific problem and has solved for it, there is probably a better software company having better data, having better customer experience, that if only they would add the embedded finance element, would actually would have actually removed the need for there to be a fintech in the first place. I think one really interesting development has happened in the last couple of months that really perhaps shows the power at play here. So Intuit, which is the company behind the QuickBooks accounting system, which is used by millions of SMEs around the world, decided to ditch, I think it's 9-year partnership with Bill.com. And you think about the logic of why that happened. Bill.com is used within QuickBooks for the business to pay their suppliers, right, to pay their bills. Intuit realized that it's actually recruiting customers for Bill.com. It may be getting a revenue share. I don't know what the revenue share is, but maybe 15–20%. So they're acquiring customers for Bill.com. They're getting a small amount of the revenue. The customers won't have loyalty to Intuit because they can go to another accounting package and still use Bill.com. So why on earth would Intuit do that? Why wouldn't Intuit simply create its own embedded bill payment capability? And that is exactly what they are doing. Now, is this the start of a trend? I don't know if it is, but the forces at play certainly point in that direction.
Well, maybe from my side, I would say in a couple of years, most of the use cases will be offered by embedded finance services. But it's very important to understand there is always a regulated environment behind. It's just like it's changing a lot, because what's happening is the bank will not be able to build the entire car. They are focusing on what they can do best. Probably it's building the engine, so that's probably the job in the basement. So what you do is more or less compliance, regulatory stuff, and so on and so forth. But you will still have a major share. And I think that's very important to understand, that we all have to reorganize how it works today. And if you think about a bank, whatever, 20 years ago, so what was the front end? There was no digital front end. The front end was the branch. The branch is not existing anymore, or not for I would say, not for a long, long time anymore. And so they have never become super mobile or super, let's say, digital. And now others are taking over this relationship. And I think that's also just where everybody needs to find his new role, a new, I would say, role, and also task in a new organized world of, let's say, banking. And that's for sure, yeah.
Ben, any thoughts?
Yeah, a couple of thoughts. So I'll probably first comment on what you just said. It was kind of interesting. First online banking experience I've built was 20 years ago, exactly 20 years ago, to 2003. It was quite decent comparing to what was around there. So I think it's not necessarily about whether banks should be doing that or not. It's about, are they capable, really, because of their limitations? And should they actually think about overcoming these limitations, and what's the best way to overcome them? Because at the end of the day, outsourcing that part just because they're not capable to do that creates subpar experience, in my view, for the end user, right? Because it's not just about do you like the app or not. It's the overall end-to-end experience. How can I get support fast, right? Can my fintech provider give me the entire support, or they will need to liaise with the bank every time something happens? What happens if my money are lost, right? The entire kind of chain of customer experience becomes fragmented if you just outsource the upper part and leave the engine at the bank. It's just my opinion, right? I'm not trying to, I'm not trying to say you're wrong, but I just have a slightly different perspective on that. So that's that part. But also, going back to your initial question, right? Whether we'll see more and more consumers interacting with the bank via fintechs, and or there will be a proper neobanks, or actually people will still bank with their traditional banks. I think there's no one size fits all. It will depend, right? As Georg mentioned just before, there's still a huge number of population that is totally unbanked, and building new traditional banks for them obviously doesn't make sense, right? So we'll see more neobanks happening in specific segments that are still underserved, and that's not just consumers. We see a lot of SMEs around the world are underserved, and a lot of businesses are opening up in that space, right? So that's one. Second, as I mentioned before, I believe there will be some sort of consolidation. Like you gave an example with Bill.com. It seems like it's just a feature. It's not a separate product, right? As a technologist, I like to refer to these things in the more technological terms. So if it's a feature, sooner or later it will be cannibalized by a bigger thing that owns the entire journey, right? So that's what's happening here. And I think this will happen more and more. This either cannibalization or consolidation will happen, well, features will become part of a bigger product, and embedded banking will play a bigger role there, really. How to serve particular journey and being part of the journey, or jobs to be done, right? Yeah, so that's basically, that's my perspective on this.
Okay. Yeah, I mean, I think that we can spend hours talking about how to tackle the underserved, the financially excluded, whether they're underbanked or unbanked, but I think there's definitely a case for embedded finance, contextualized banking here, right? I mean, a play between a mobile money operator in East Africa, for example, expanding beyond payments, offering, you know, microloans, micro savings. There's, I think, a lot of scope. So I want to jump a bit to a brand, a bank using a bank as a service or an embedded finance enabler, and kind of what's required for success. I mean, I think everyone's seen recently the divorce between Apple and Goldman Sachs. So I think it takes a lot to have a successful partnership. If you're a brand, a fintech, someone that's looking to embark on an embedded finance or bank as a service play, what do you think these brands need more? The right people to execute or the right technology? Would you put all your chips in people to build it out or the best technology at play? Claudio.
Well, I believe it's all about the team. And if you think about embedded finance and those players which are entering the market, they don't really care about the regulation. That's why they are going for a banking as a service provider. That's what they buy as a service. It's called banking as a service. So why would any of these companies be interested in getting regulated? And I can tell you again, tons of customers, but also examples where they simply say, if it's easy, we do it, but if it's getting complex, we are not interested at all. And I think that's definitely where, as I mentioned before, we have to be focused on what we actually do as, let's say, in the value chain. And just coming back to my example of the car, of course, you can build the entire car, but this bank is building a shitty car in the end. Because you need to build, and you need to bring the entire, let's say, product into a context. And the only ones who can do that is those who have the customer access. Customer relationship is everything, and that's, I think, something what the entire industry needs to understand. There is no business without a customer, and we can build compliance processes in the background, and of course, a bank should do that because they can focus on this. That's what they are best at. But tech companies in the intermediate, so let's say the ones who are connecting the dots, so they should build a tech around, and let's say the embedded finance player should bring the customers. And so we all have a business case. And I think that's what we need to understand and what we need to learn, that this entire thing is getting into the future. Yeah.
Alex?
I have an angle on this. Actually, if you take the world's oldest, probably most developed embedded finance example, and I think it gives us a really clear answer on this question. Is it, do you need great people or do you need great tech? Take the checkout page, right? So 25 years ago, a bit longer than that now, 27 years ago, it was the first transaction done online. It was pretty crappy. That evolved into hosted pages. You had to go to a bank website to enter your card details, and you got referred back to the merchant. Really horrible experience. Look at checkout today. I mean, couple of lines of code, anybody can do it. You stick it in your Shopify, basically, configurator, and you're up and running. You don't need great people to do that, and it works a dream. So I think technology can do a lot with this stuff once it develops. It will take time to develop. I mean, there's big hurdles here, as we talked about earlier, but all sorts of technologies like compliance as a service. We talked about compliance earlier. There's been an emergence in the last, I would say, 12 months of this concept of compliance as a service, which will solve the problem that basically banking as a service has at the moment. So technology will find a way to make this simple and also ready to be adopted in the mass market. There's a world of B2B SaaS that is crying for embedded finance. They want to generate usage-based fees. They want to generate consumption-based pricing. And embedded finance provides them with the perfect way to do that. They will not do it as long as embedded finance is complicated. When it gets simple and technology can make it simple, it will simply be plug and play. So I know where I'm sitting on that particular side of the argument.
Thank you. Okay, Ben, I think you're the tiebreaker. People or tech?
Yeah. So first of all, just quickly to kind of build on top of what you said, Alex. So and a bit of a marketing alert here. So that's basically our job, is to simplify that for banks, right? That's why I believe it's a question of people, organization plus technology. Technology should be easy to use so that you don't have to reinvent the wheel, right? You don't have to build everything from scratch every time you want to build a great experience for customers. People need to be skillful and, let's say, experienced in a modern way of working, because that's very important. It's not just about tech. A lot of time we emphasize tech, but modern tech doesn't land from the skies, right? People create modern tech. And if people are used to ways of working that were typical 30 years ago, they will not be able to create modern tech, because that's not how it works. Today, modern tech is very highly dependent on modern practices and modern ways of building tech and operating that tech, even more importantly so, right? One of the aspects why neobanks are more successful than traditional banks is because neobanks releasing improvements to their technology 100 times a day, sometimes 1,000 times a day, whilst traditional banks still do that every 6 months, right? So that's not about tech. It's partially about tech, but not just tech. It's much more so about people and modern way of working, right? The main thesis Monzo had when they launched their bank was that, hey, banks are slow, we can do it much faster, hence we're gonna win, right? So their whole thesis was about, just because we can work as a tech company, we're gonna win, right? But it doesn't mean they have figured some unique technology that banks couldn't figure. No, they just took an approach of modern tech company and applied that to banking, and were able to build a bank that is much more successful because they can continuously improve it and innovate on top of what has been built. So when banks will learn to do that, either by themselves or with the help of technologies that some of us are building, this might start changing one step at a time.
Thank you. So moving on to our final question. We kind of started the panel talking a bit about the future, how bank as a service, embedded finance is transforming. And usually I would ask this question at the end, what does the future hold? But I think there's a more pressing question around regulation and the regulators. I mean, Modular, Rails Bank, Solaris, Contest. There's a lot happening with bank as a service and embedded finance and, abiding by regulation, compliance. We've talked about this. In a couple of sentences, what's the one thing that bank as a service providers and embedded finance enablers, contextualize banking enablers, need to do in 2024 to be on the right side of the regulator? Alex, let's start with you.
No, it is compliance as a service. I mean, the fact is, the idea that compliance will be somehow, outsourced to the fintech or to the embedder is dead, I think. And regulators are making it very clear that they do not find it acceptable for a banking service player to go and do an audit once a year. The only way around that is to actually create frameworks for compliance that are flexible, that can adapt to the different use cases, but ultimately are going to be driven by dedicated compliance as a service stacks and the managed services behind them.
Ben?
Yeah, I fully agree to that. I think compliance is one of the functions that needs a lot of technological advancements and automation, right? Instead of relying on people knowing every single compliance rule, and especially at scale, right? When this needs to happen in each and every organization. It's a highly complex knowledge. I don't know on purpose or not, but it is a highly complex topic, requires highly complex knowledge, and it's very difficult to scale because of that. And everything that is complex and requires specific knowledge is much better to be consolidated and provided as a service. So as simple as that.
As simple as that. Claudio?
Yeah, actually, I think as a banking as a service provider, you need to be able to divide the fin and the tech. So the banking side, the license side, and the technology side. You need to get your processes right. And what's very important, and sometimes in the past, fintechs, but also, let's say, every company involved did, I would say, forget a little bit about that. You need to be in conversation with, in constant conversation with the regulator. And it's also a bit of education, because I've seen some markets where the regulator doesn't even know what banking as a service is, because they are not really used to the model. And I think there's also lots of stuff we need to do to educate the market. Yeah.
Okay, Claudio, Alex, and Ben, thank you so much. I hope everyone enjoyed this really insightful and forward-looking panel on embedded finance and bank as a service.